Hey traders, welcome to Charts and Coffee. Happy Wednesday, happy day 2 of the Powell testimony that we have. We saw what yesterday's testimony did. We saw that a slightly more hawkish Powell did indeed land in the Fed Fund futures and ultimately moved target rate expectations to a more hawkish, meaning higher target rate, higher percentage outcome. And of course, equities have to respond, and respond they did. Usually, day 2 isn't quite as crazy as day 1 because we've already heard from Powell. He's already released that prepared statement. We already have a gist of what he's going to say. So today is really a matter of, does he back it up and just stay steady with the message? I mean, there is the possibility he ratchets up the hawkish talk, which would be pretty incredible. But if anything, it could be steady, neutral to maybe walking back some of the expectation. However, for the first time, we are looking at a much more possible hike into July. We're looking at being as high as maybe nearly 6%. And these are not, and I want to remind everybody, the overall reaction to yesterday's comments from Powell and the Q&A that followed, we went to the most hawkish potential outcome that we collectively as traders and investors have ever even had to factor in. It was the most hawkish outcome since this tightening cycle began. Even since we speculated on this tightening cycle, it is a full 2% higher than levels that as recently as, say, September were possible, where we were flirting around 4 to 4.25. We're flirting at almost 6%, so 2% higher. And yet, look at what equities have done. I'm not saying this is a screaming uptrend, but if higher rates are the sole reason we're going to have catastrophic moves to the downside, that simply is not playing out in reality. We're at the end of a tightening cycle. We have incrementally moved higher from 4% to nearly 6%. The old saying is true. How do you cook a frog? I know it's kind of a terrible analogy, but it does work. You toss a frog into boiling water, that frog's going to jump out. You turn that heat up slowly, you got frog stew. We are the latter frog. They've just turned the heat up very slowly. And while they've been turning the heat up, remember, there's a reason that good news, data that's better than expected, lower inflation or stable inflation, stronger jobs, relatively decent growth, there's a reason that then brings us higher target rate probabilities in the Federal Reserve. Because as long as they're not breaking the economy and destroying jobs, they can continue on the path that they have begun. That's it. That's why bad news is good news, right? One of the interesting things yesterday, and I noted this in the free video, and if you haven't checked it out, you can over at Simpler Trading's YouTube website, yesterday's free video where I talked about Powell and the sell-off and support. One thing that was very interesting, and we see the ADP release sent bonds higher, which is to say yields are moving lower. One of the interesting things here is bonds did not melt down. If we're going to see higher yields from the long bond accompany a sell-off, we did not see that yesterday. So very interesting, maybe anomaly, if you will, where bonds did not join the broader averages, the Dow, the S&P, the NASDAQ, in that move lower. All right, so that's where we sit today. It's hard to be bearish when we are still basically making 50% to 618% retracements of the March range. I'm not going to presume March lows are going to be broken any more than I'm going to presume we're just going to reorganize into an uptrend. Gang, trading is not about predicting where anything is going to go. Prediction as a rule, it's not how we can do anything in life, right? Or as the saying goes, life is what happens when you're making other plans. Same thing with trading. However, we can react. We are the batter at the plate. The market is the pitcher at the mound, right? We don't know what they're going to throw, but we know what we will respond to. So we're always thinking about reacting to what we have, not trying to predict what we're going to get. All right. Please listen to me now. Believe me later. All right, gang. So let's jump into the questions. Good morning. Good morning. Hey there, Stacy. Yep. Flat is a position. Yeah, absolutely. Flat is absolutely a position. And you know, that's definitely something as a day trader I will consider again today not being too active on the intraday timeframes and being nimble, as nimble as we can be anyway, and possibly saying, you know what, 5 minute time frame, I might opt for the 1 hour. I might say that the 1 hour has got a better shot at absorbing the volatility, like a shock absorber, and I can put on a short-term swing on that 1 hour time frame. Absolutely. So flat is a position, and 1 hour short-term swings will definitely be an option. All right, thoughts on a position trade in Oxy? Hey there, Jesse. Sure. Oxy is still below the 200 propulsion, which is to say we're in the bearish hemisphere. Doesn't mean we can't buy. We just know we're not in the bullish hemisphere yet. So just getting to the equator, if you will, which are those white dots on the chart on the right, just getting to that level would be sort of a win. And that means that I don't want to get long where we are right now. I don't have a setup. Do I have a position trade here? Not on the daily, but what about the 1 hour? The 1 hour could be interesting. It is setting up for a near-term pullback, which would frankly suit me just fine. Let's see if we can organize into an uptrend. We have it convincingly in a bit. You can see here through Tuesday, lost a lot of that swagger to the upside. Can we retest the propulsion? Can we retest some of these Darvis levels? That could be a buy. But right now, it's looking a little toppy at the moment. So if I'm going to put on a short-term swing on this 1 hour, that's looking like the best time frame for a setup. We're still in setup mode. If we're looking at Oxy, Jesse, I would also say, what else looks good in the XLE ETF? What else looks good in even the XOP ETF? What are some of the stocks that tend to move a whole heck of a lot like like Oxy in the sector where at this point I can start to be a relative outperforming scanning watch list building trader? A lot of bearishness in XLE, a couple glimmers of some bullishness. You can see MPC might be a little bit better than Oxy. VLO might be a little bit better than Oxy. Schlumberger might be a little bit better than Oxy, as might PSX. So you're definitely looking at a neutral environment, but the most bullish neutral, and this would be visible on the multi-trend as well, where we have bullish momentum, neutral trend, bullish momentum, neutral trend. How do you see that on the multi-trend? This is a key part of the DPMR toolkit, and it is part of the class, probably one of the most important indicators that I use. So here's MPC on both the 1 hour and the daily, and you'll notice neutral but bearish on the 1 hour. Neutral but bullish momentum. So the top row is momentum, bottom row is trend. So MPC might be another one to take a look at, Jesse. A cool corner of the market to look at. We just might want to be a little bit more specific about which one we think could have better follow through. So thank you for the question. All right. And by the way, gang, it's happening tonight. Tonight's the last webinar. This is it before we get together for the class, showing you how I trade 1 hour timeframes, mean reversions, as well as DPMR. We use them together, right? So you can register for that at simplertrading.com/clear, where I will talk about mean reversion. That's some kind of lingo that's thrown out a lot, but how do we know what a mean reversion is? How do we define that? And how do we take advantage of volatility within the context of a trending and non-trending market? Mean reversion trading works best in a trend. The daily price movement ranges work in any environment, but it's our job to make sure we measure the environment first. We'll be talking about a lot of that stuff and where a lot of trading plans go wrong, not because the indicators, the plan isn't good, but there's just an initial misread on the environment. Okay, so those are things we'll definitely keep in mind when we go through that webinar class tonight, simplertrading.com/clear. All right. Hey there, Robert. I went long yesterday in XPXL shares rather than options. Do I ever use leverage ETFs for trading? Robert, I do not use leverage ETFs. If I want leverage, I'll trade the futures and the futures options. So I'll stick with the leverage of that asset class, futures. I typically don't. But by the way, there's nothing wrong with it. My only thing is make sure it's liquid and make sure that we have a read on the underlying underlying market as best we can, and then go forward with that choose your own adventure approach that I embrace and encourage so much. All right, next up, Pierre. Good morning. My thoughts on CRWD. Sure, it's a buy the dip. So mean reversion, right? It's a mean reversion on the 60-minute too, and that means, all right. And this is, a lot of times we start as traders with our trades at the price level, and that's it, right? Either there's a price pattern or there's an indicator. That's all price, yeah, which is fine. But a lot of times what happens is traders don't read the structure of the market first, right? And that's where, regardless of the strategy that you're using, the number one step, the very first thing we have to do is gauge the environment. We know this in just about every other walk of life. We dress according to the weather. We, if we're going to go fishing, we grab our tackle according to the water and the fish we're trying to get, right? If we're pulling a club out of the bag, the lie dictates the shot, right? Where is the ball and how far am I from the pin? We know this in every other walk of life, and yet somehow, and this is such a financial funny reality, is we don't do that in our trading. So if all those things resonate, yeah, of course, Rog, I'm going to grab my tackle box according to what I'm fishing for, and I'm going to grab the club out of my bag depending on where that ball is sitting, etc. Trading is no different. And so if I can start with structure, I've immediately increased the probability that I'm going to be on the right side of the trade and use the right indicator and the right strategy. I want to be a buy the dipper. It's a little fresh in terms of the uptrend, but a mean reversion would be in play. I would look to be a buyer. Now, the only thing that we got to deal with here, as you can see, is earnings. And I like to not engage earnings. I like to be out before earnings. So this would not be an earnings play. I don't believe in earnings plays. They're very binary. They look very sexy on the surface, but it's sort of like, what it's like, earnings plays, and I'm dating myself a bit. How many remember the opening? It's legendary. You can find it on YouTube. The legendary opening of Wide World of Sports. And everyone remembers that dude coming off the jump, the thrill of victory, the agony of defeat, right? It's a very binary thing. And that's why I don't play earnings. That's why I don't play the reaction to a hot zone. It's way too binary. There are better ways to play them. It's sexy. It's fun. I know a lot of people like to do it, but doesn't mean that we should do it. So I would avoid the earnings. Not that that's your question in any way, Pierre, but I would avoid the window about at least one session after earnings. And I want to be out before earnings. So I'll leave earnings alone. Wide World of Sports, right? And then I'll play either leading up into, which was actually pretty good, or after, post earnings. But I would definitely look for a buy the dip opportunity. All right. Buy the dip. As long as the structure suggests it's okay. There are places where the structure would not suggest it's okay. Where can we not buy the dip, gang? Can't do it on CVX. Can't do it on EOG. These are downtrends. What do we do here? Well, we sell the rip. That's the other type of trend mean reversion approach we could use, which is if we're in a downtrend, the market rallies to resistance, that's a sell the rip, right? So everything is predicated on market structure. All right. Can we take a look at SMH? Hey there, Ken. You know what? Let's start off with the multi look. And there it is. So we can look at SMH, then we can take a look at the ETF itself. Whenever we're looking at an index or an ETF, we always want to remember what is in it, right? This is what a relative performance scan done well and easily looks like. What is the broader, what's the tide doing? Yeah. Neutral above the propulsion. TSM, the number one weighted stock, neutral above the propulsion, above that 200, above the equator. NVIDIA is straight up in an uptrend. That's one of your relative performers and heavily weighted. AVGO, uptrend, another relative performer, bullish relative performer, and relatively heavily weighted. If you want to be a bear, short Intel, right? If you want to be bearish, short MU, short Qualcomm, possibly, right? They're below the 200 propulsion. So those types of assessments are, now here's what's interesting. Texas Instrument could be an interesting buy. Neutral, but maybe a buy. AMAT could be looking, we could be looking at a potential buy, maybe even LRCX. Once we take a look at the individual pieces, SMH itself is actually pretty darn bullish. I don't have a problem with getting long SMH itself, but it won't be a trend following setup. So let's pull that up here. SMH is going to be an oversold buy. I'd like to see it. Now, this is not going to be a mean reversion. So those of you that have the wave, right, or may not quite know what to do with it, definitely check out tonight's webinar. If you've got my TOPS tools, which is the foundation for everything, my hot rodders out there, you know this is true. When you're hot rodding a motor, you better start with a really good engine block, because if you start doing what you're going to do to push high performance out of that motor, and that engine block is not solid, just blow your motor up. You know this, right? Piston through the, it ends badly. This is our engine block. TOPS, the 34 EMA wave, grab, Darvis, our multi-trend. Everything is in this really, really powerfully, accurately machined block, right? And now we can hot rod the thing. So I'm married to a hot rodder. So before we bore and stroke it, we better make sure that it can handle it. That's where the TOPS comes in. What's my underlying environment? It's neutral on the hourly and the daily. That means that a different set of tools are going to be used. Use the slow stochastic. That's my preference. That's my favorite. I have yet to find anything that will outperform in an overbought, oversold environment of chop at 21K, 3D slow stow. All right. And you can see we're actually getting a signal on the 60. A little bit more conservative, I could look for the DPMR opportunity, right? And those are things. And if I want to be a little bit more specific to the relative outperforming boats in SMH, that takes us back to the multi-trend. NVIDIA, buy the dip, right? Buy the dip in NVIDIA. By the way, if you're looking for a short in SMH, sell the rip in Intel. So you have an interesting push-pull here in terms of different stocks weighted within the SMH that are doing different things. So Ken, that's hopefully a helpful and thorough breakdown of what's going on with semiconductors. All right, next up, RIVN for a long-term swing. I think the bot just added RIVN to our DPMR list, which I believe is over 100 symbols strong now. And you'll see here, our RIVN, I would be a little bit more bearish in. It might be a really cool short-term swing trading name. It might be even a really cool day trading name, but it's under 20. I'd be very careful. And what I would also say is you want to pull up some volume on this. Let's look at this through our volume max, right? Our anchored VWAPs, our V-score. We still have a little ways to go before the V-score bottoms out around the -3 standard deviation. Yeah, the -3. So we have a little ways to go before we might find support. And by the time we get there, RIVN on the daily time frame might have then transitioned into a red downtrend. So always looking at the environment that we're focusing on. The 5-minute is the 5-minute RIVN. That's in a downtrend. The 1-hour RIVN is also in a downtrend. So I would say I'm pretty bearish on this one, Pat. All right. So let's see what else we have here. Rig. Let's take a look at Rig. Okay, so we have Rig, and what do we want to do with Rig? Yeah, Rig looks awesome. It's a low cost stock. It's one of those exceptions to my sub $20 rule, but it's a good looking name. It's heavily weighted with an XLE and I believe OIH, but it's a good looking name. It's a low cost name, but it tends to trend very well with the sectors that it is included within. Yeah, buy the dip for sure. Green, multi-trend. Structure. And if you don't like to buy the dip and you want to be a little bit more nimble, I'd keep an eye on the 60 perhaps. Neutral environment, bullish before, oversold stochastic. That's what those two arrows are telling us. And then we want to find a level from which we can get long. It might be the 200 here. It might be the Darvis right in here, our Darvis 2.0. A lot to like to the long side here on Rig. Absolutely. Yeah, absolutely. Okay. What else do we have here? Any thoughts on MBD? MBD, is that this? Oh, MDB. MDB. I would play the 1 hour. Let's be a little bit more nimble on that one. Joseph, I'd be a little bit more nimble on that one. Okay. Yeah, I'll be a little bit more nimble. It's coming off an oversold buy. PJ asks, am I speaking at the Women's Trading Symposium this week? PJ, no, I'm not. I've got a class that I'll be teaching Saturday, and I've got a webinar that I'll be doing tonight. So tonight's this week is a very busy week. It has been for the last few months, 10 months of testing for the indicator. And we've got the second webinar tonight at 8, simpletrading.com/clear. And then, yeah, PJ, I've got a class I'll be teaching this Saturday. So very, very busy, a wonderfully busy week, but very busy week. Thank you for the question, though. All right, gang, let's get to work. Bell's going to ring here in about 9 minutes. I will see you all in the Sector Secrets Mastery Room for our double header. We'll kick off the morning with our typical hour of day trading. Then we're going to move on to our swing trading setups. And by the way, if you have signed up for the class or are planning on doing it, please remember each one of the class offerings has a number of indicators that we are including apart from the DPMR that help with my short-term swings. And then it includes either anywhere from 1 month to 3 months with me in the Sector Secrets Mastery Room. So if you want to trade with me for 1 to 3 months, depending on which package you're in, you've got that as well. And so super stoked about tonight. Gang, I'll talk with you later. Same time, same station tomorrow. And I'll see you tonight at 8. All right. It's almost past my bedtime by 8. We get up early around here in the Horner household. So all that great energy is always welcome. I'll talk with you soon.